Kia ora, and welcome to this special episode of Shared Lunch, brought to you by Sharesies. My name is Susannah Batley, and I'm the General Manager of Company Partnerships here at Sharesies. Today I'll be joined by Nick Lissette, who is the founder and CEO of Blackpearl Group. Blackpearl Group is a data technology company that creates AI-powered sales and marketing products for small and medium-sized businesses. Blackpearl has announced a capital raise, and Sharesies will be distributing the retail offer to Sharesies investors, for which Sharesies will receive a fee. In this conversation with Nick, we can't talk about the offer as such, but we will be talking about the company generally, about the use of proceeds for the funds raised, and also about the company plans for the future.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Nick.
Thank you very much for having me. Where's the lunch? I'm starving. I held off all day.
Forgot to tell you about that part.
Yeah.
So I'd like to start with a bit about you, Nick. Why you decided to start Blackpearl Mail and how you came up with the idea and the problem that you're looking to solve.
Well, I started Blackpearl Group. I clearly too ugly and stupid to get employed by anyone else, so I was really forced to go down the entrepreneurial path. I actually only had one job, selling rubbish bins right out of university, and I started my first company at 24. You can see from the greys on the side. I'm 27 now. So the whole purpose around Blackpearl Group is really solving, I think, what is a universal challenge for any small to medium-sized business. And there is probably no time in recent history that it's been more expensive and less effective to try and do digital marketing than now. It is super tough for businesses. You know, there's been pandemics, there's global downturns, changes in data laws, which have meant that it's become really expensive to advertise. So our whole purpose is to create really affordable and very effective data-driven sales and marketing services, which even the playing field for small to medium-sized businesses.
And let's talk a bit about the business model. So how does Blackpearl make its money?
Recurring business model. So some people call it subscription, others, SaaS recurring revenue. Some have even said the zero model. There's all sorts of ways, but the whole idea is to charge a little bit and then provide exceptional service so the customer pays you month in and month out. And so when you're looking at that kind of model, the really important thing is your annual recurring revenue, because that's really what you're acquiring, the forward payments, and then making sure that you've got great customer retention, which is, if you ever hear about churn, you want to make sure churn's low, customer retention's high, and that you're growing that ARR all the time.
So just to dig in a bit more, is it 100% recurring revenue or are there also services revenue on top of that?
No, we're 100% recurring services revenue. So we're not goosing the books with any one-off stuff.
Glad to hear it. And when you talk about your customers, there appears to be three segments. So first of all, there's the solopreneurs or the small businesses. Then there's the medium-sized businesses. And then there are what you call partners. Can you talk about who these partners are and how they interact with and get value from the Blackpearl Group?
Absolutely. Well, partners are really a force multiplier for us. They're a way of getting to the solopreneurs and small to medium-sized businesses at scale. So we have a suite of products. Our hero product at the moment is called Pearl Diver, and what that does is it lets businesses actually get ownership over their website data. They can now finally see what Google and Facebook and all those large corporations have always been able to see, which is who's on your website. So you can actually get ownership of that back and then use that to become less dependent on pay-to-play advertising services. So quite simply, you can see who's on your website, how to contact them, and use that to make your next decision. So if you think about that for a solopreneur, that is probably most cost-effective digital marketing spend you're ever going to have. Same for a small to medium-sized business. You can actually cut back on that spend to Google or Facebook and redirect some of that to other more meaningful purposes and increase revenue. And then obviously from a partner's point of view, this is a great product if you're a digital marketing agency or a solutions provider to add to your bundle, so you're providing greater value through to your customers.
So you gave a digital agency as one example of who a partner might be. Can you give a couple of other use cases on other partners that you've got, and then maybe some examples of who their customers are that you're ultimately selling to?
Great, yeah. So another great example when I talk about like solutions providers is we've got a car dealership CRM provider. So they've got like 3,000 car dealerships under them. Yeah. And again, in the auto industry, really competitive in the advertising space, and you're going to take any little inch of leverage you can get to be more effective there. So having this as an add-on into that product, well, obviously that provides a significant point of difference for that partner's CRM comparative to anything else on the market.
Yeah. And in one of your recent reports, you mentioned that you have over 3,800 customers and $4.8 million of annualized revenue, recurring revenue.
4.6.
4.6, sorry.
Yeah.
Even better. And that equates to probably still just over $1,000 per year per customer. Mm-hmm. In terms of growing revenue, is the plan for you to do that through increasing that average revenue you get per customer, or is it more about keeping that metric reasonably constant and just growing the number of customers that you serve?
Great question. It's about increasing that number, and it's about increasing the amount of customers we're servicing. So yeah, we've got 3,800 customers, but across our suite of products. And so at the lower end of that, you've got, a new old stamp, and that's, $20 or $30 a customer a month. So very affordable. Pearl Diver is around $500 New Zealand per customer per month. And so we've actually increased the amount of average revenue per customer by, I think, 60% for this financial year, and continue to do so. Mm-hmm. So it's about adding value. If you think about charging for a service, you want to provide exceptional value, because coming back to that churn, if you're not doing that, then then people are just going to fall out. You have a hole in the bucket. So we're very mindful of always providing great value for money. And so, yes, increasing price points, and also increasing the amount of people we're selling to. And again, this is where partners come in, because you can sell one-to-one. We've got an amazing sales team, a great customer success team. But if you really need scale, well, partnerships are a great force multiplier. And so one of the things we're fortunate to have is an amazing Chief Revenue Officer in Cheryl Presley. You and I were talking about her before. Yeah. And Cheryl's the ex-head of partnerships for Microsoft. And then after that, she was the head of global partnerships for Google. So there's not very many people on the planet that know more about partnerships than Cheryl. And so having her in there, putting the structure in place and driving that new revenue stream is just a phenomenal asset for us.
Yeah. And I imagine that when your target market is those small and medium-sized businesses, getting that cost to acquire customers down is really important. So presumably partnership is a way to make sure that cost is not too high, and hence you're not having to charge too much to customers to recover that investment.
Absolutely. I mean, yeah, you touched on two things. One is cost of sale. Mm-hmm. Partners are great for that, because you get one partner and they might bring 10 or 20 customers under them. Yeah. The second thing is making sure you get the price points right for customers. So at the end of the day, that's who we're building products for, to have great value for our customers. And so we want them to be able to get very quick return on investment when you're using our products. You want to be able to clearly identify where they're getting that return on investment and let them get it quick.
Yeah. And in terms of what your products are focused on, you've mentioned email. Are your products suited to companies operating in all geographies, or is your customer base more concentrated to a certain area?
US. So our focus is very much on the US. And the reason for that is obviously that is the main market. We have really kind of unnatural advantages for a New Zealand company dealing in America. My business partner and our chairman's Tim Crown, who's founded a multi-billion-dollar technology company himself, which is Insight Enterprises, which is on the NASDAQ stock exchange. So we've got that kind of top-down direction from Tim. Mentioned Cheryl before, who's based out of America. So that's really our target market, and the geographies we focus on. Pretty much all industries. So education's one industry we're not really into that much. Otherwise, it's pretty much everyone else, and doesn't matter. We'll sell to B2B or B2C businesses, but we're business to business. We only sell to other businesses.
Yeah. And just before we move on, one more question on your customers. Outside of those partners, what are your main sources of lead generation?
Facebook, marketplace has been, not marketplace, Facebook advertising has actually been really effective for us, and it's surprised me like just how much business traffic you get from that. So traditional pay-to-play advertising platforms, who ironically we're kind of taking business from, not that they've noticed the amount we're doing. I think what Google was $225 billion in advertising. That's how much they make from advertising, so they're not going to notice what we're doing at the moment. But Google, Facebook, they're the main ones, and then of course as you get partners going, the dependency on that reduces.
Yeah, Google is really an advertising company, isn't it? I mean, we talk about it as a search engine, but it's an advertising company.
Yeah, I mean, that's the main thing, is that if you think about, I was talking about Pearl Diver before, like you think about the challenge of a business, only 2% of people on average, if you're doing a good job, that turn up to your website leave your details. And so what do? Then you get told to go to retargeting or bring more people on the top of the funnel, which is paying Google more money to then follow those people around the internet. They know who they are and they won't share it with you, and that's how they make their $225 billion. It's pretty rough. So yeah, they're definitely an advertising company.
So you did what is called a direct listing on the New Zealand Stock Exchange at the end of last year. A direct listing is a bit different to a traditional IPO, in the sense that there was no money being raised either through the sale of new shares or via existing large shareholders selling down. Given that there was no new money raised, what were the main motivations for listing on the stock exchange? Yeah,
so two reasons. One, in part a defensive strategy, so we could see that markets were going to tighten up, and I think private technology stocks, if they go to raise money, kind of took a hit by 80 to 90%, so it was rough. Comparatively, public sector was 60%. So there's the negative to it. The positive is that we deal in data and we sell to the US, and the trust that comes with being a public company is night and day. And you're talking about reducing cost of sale. That's the single biggest factor I've seen actually in our sales time frame, is that you're trusted because you're held to a higher standard. And then the third thing is, we wouldn't want to quite do it at the moment where the stock price is at, but the ability of actually acquiring other companies using stock is something that I think we have a lot of experience in within the company or within the group, and something we actually executed on immediately prior to listing as well. So it's just about options. You have a lot more options being public, and you can actually move more quickly as well. And like this is a great example. Like, okay, we need one further raise to kind of get to the promised SaaS technology, goal of that recurring cash profitability, and you can pull that together very quickly comparative to private.
Yeah, that's really interesting. I think that as you say, the other form of currency that a listing gives you in terms of M&A is one that is talked about quite a bit in terms of a benefit of listing. But I think your point around credibility and how much that has helped in terms of a listing giving you that is a really interesting one, and maybe one that's not talked about as much in terms of a benefit of using the listed model.
Totally.
So when you did list, the share price was set at $1.25 and is now trading at around 58 cents. Obviously, markets have been very rocky and share prices right across the board have come down over that period. But for those people that invested in Blackpearl just after you listed, the value of their shares as it stands now will be worth less. What would you say to those investors?
Yeah, I think it was really the people beforehand that sold that would have not seen as big a return. So we actually had a lot of very early shareholders that were still going to get a return at 57 cents,
Yeah.
and that's the reality of that. But again, what I talked about earlier is if we'd done around privately, it would have been a lot worse than that, and comparative to the market average, actually, we trended pretty well. So we were going to go on at rocky times. It's just it's more publicly obvious when you're public. But, it didn't change anything for us from a strategy. We have literally held dead set fast on what our operational strategy is. And at the end of the day, you've got to build a great company. That's what we're set about doing. And now we're starting to see the rewards for that. I think I saw an analyst paper last week, and we were the top performing tech stock on the NZX, and definitely the fastest growing, and I think maybe also on ASX as well, but don't quote me that. We're not on there, but comparative to the growth there. So sooner or later you're trued up, and that's the point, is that stocks go up and stocks go down, but a great business at the end of the day always come out on top.
Yes, that time horizon. Well, let's look at that in terms of some of those metrics that are more in your control, like revenue. Your annualized recurring revenue has more than doubled over the last 12 months, from about $1.5 million in September last year to $4.6 million today. In your latest investor update, you talk about that path to profitability. Outside of any further acquisitions that you might undertake, could you talk a bit more about when you expect that to happen and what that looks like at that point? For example, what does revenue look like to be cash positive?
Great, yeah. So we anticipate, based off the scenario planning we've done at the moment, that it will be like August next year to the end of next year. So somewhere within that window is what we've projected. And that's based off organic growth, no acquisitions, because we're adding around $500,000 annual recurring revenue at the moment. That's every month. That's what we're adding on. And that break-even point for us when you're in recurring cash profitability is would kind of equate to about $10 million annual recurring revenue.
Yeah. And
as you kind of pointed out before, we were at 1.5, we're now at 4.6. I mean, last month we're at 4.1 or 4.2. We're growing very quickly, and as that partnership channel continues to mature, we think we can accelerate in what we're doing at the moment. And it's such an important milestone for a recurring revenue company, because you constantly have that cash flow, and then that's when all the good things happen. Yeah. So it's really exciting times. I think it's hard for some businesses, but if you can take advantage of this situation in the market and grow and do that affordably, it actually makes things a lot easier in the long run. So we're in a good position.
Yeah, definitely gives you more choices being in that cash flow generative position. So last week you announced that you were looking to raise $4 million of capital to fund the growth of the company. Can you talk us through what you're planning to do with that money?
Grow to profitability. That's it. So it's to help support the partner program. It's to help support direct sales. And then a small part of it as well is to continue our innovation. So great example of that is Pearl Diver didn't exist in January this year. So we were able to get access to a new data set in March. The product was released in April. 90 days from its release, it already generated $1.5 million worth of annual recurring revenue, and then continues to grow from there. So we want to be replicating that with other technologies. So making sure we've got cash on hand to be able to take advantage of that's key. But again, it's just really around sales and driving that through to that recurring cash profitability position.
We've talked a lot about things today, and I really enjoyed learning a bit more about the business model, about who your customers are, and a bit more about your most recent product. What is the one takeaway you would like people to remember?
The one takeaway about Blackpearl is the people. And I've been name dropping furiously through this the whole interview, and we're very lucky with the people we've got in the company, with Tim as chairman, Cheryl, Sam Daish is our chief revenue officer. He's the ex-head of data and strategy at Xero. But the thing about us as a company is that everyone in the company cares greatly about our customers. And that's from dev to customer success, sales, marketing. Everyone's in it for our customers. And so if you value a company by the people within it and how much they care about the customers, well, Blackpearl Group, we're an amazing company.
Well, thanks so much, Nick. It really has been a pleasure, and thanks to everyone for tuning in. Have a great rest of your week.